The broadcast is now starting. All attendees are in listen-only mode.
Can everyone hear me tonight? I think my microphone was off. If you can just type a yes in the question box, I would appreciate it. I think we're going to have to start again because I do want to make sure that everyone can and has the opportunity to read the Nadex risk disclaimer. And this is for your protection as well as for our protection. Anytime you're trading, there is risk involved, even with binary options. So take just a moment to read over the disclaimer, and then we'll get started for the evening. Now, we will be doing some binary options and spreads on the Australian dollar currency pair in anticipation of the market release at 8:30. Now, for those that do not know me, my name is Gail Mercer, and I have over 15 years of trading experience. I started out with a company that programmed indicators, and really, I just fell in love with the price bar. I thought it was amazing that we could actually see the prices on the live edge of the market. I do specialize in price action, volume analysis, and divergence because I believe they're leading indicators. I'm also a frequent contributor to Stocks and Commodities magazine, Traders World magazine, and Top Shelf magazine. I've also been a speaker at Traders Expo, Traders World Online Expo, and the Wyckoff Volume Conference. I'm also the author of 3 books on trading Nadex binary options. They are Trading Nadex Binary Options Using Currencies, Trading Nadex Binary Options, Keeping It Simple Strategies, and The New Trader's Guide to Trading Nadex Binary Options and Spreads. Now, I wanted to go over real quickly the differences between binary options and spreads. Binary options have a maximum payout of $100, and they are considered all or none. And that means it's dependent on the expiration value unless you choose to exit early. Spreads, the actual risk or profit is determined by the expiration value. Every spread consists of both a floor and a ceiling. When we're looking at spreads tonight, the floor will be on the left-hand side and the ceiling is on the right-hand side. Now, what can we expect from the Aussie dollar report tonight? Well, historically, the potential movement immediately after the report release is an average of about 40 pips. Now, that's measured on the 15-minute bar once the report is released, and I measure it from high to low. That gives you the full movement from the market report. Now, you've got all kinds of ways to trade this market report. You can just trade binary options. You can just trade spreads. You can use a combination of the 2 hours with the dailies, or you can use both a binary and a spread. Now, again, there's all kinds of combinations that we can do. And I want to reiterate that this is a training session tonight, okay? I'm going to be showing you different ways you can combine these to trade these market reports. I'm not focused on direction. I'm focused on teaching you all the different ways you can utilize the binary options, okay? Now, before we go over to Nadex, I do want to let everyone know that my website is www.tradershelpdesk.com, or you can always email me at gm@tradershelpdesk.com. So let me bring Nadex over, and we'll start looking at some combinations prior to this market report coming out. Now, can everyone still see my screen? And what I'm going to do is first I'm going to click on the forex binaries. I'm also going to click on the forex spreads. Now, I want to bring up a chart, and we're going to choose the 7 p.m. to 9 p.m. And I just want to bring up any chart will do. So in this case, let's say that we have a bias that the market's going to go up at the report. Okay, this is where the 40 pip historical movement comes in. Okay, there are 5 pips between the strikes here. So you see this one, I'm sorry, there's 4 pips. This is 78.42, this is 78.46, this is 78.50. Okay, so if we think it's going to move up, we could choose the 78.50 area. Okay, now the current price is 78.42. So if we get that 40 pip move, well, that's going to be a nice profit, okay? Now, if we think it's going to go down, we could come down here and we could actually sell the 78.34. Do y'all see that one? On that one, it's got about $24 of risk. Now, the one thing that you want to notice is where is it currently trading and where's the strike that you're going, okay? So we would do the 78.34, and that's less than 10 pips from where price is currently trading. Does everybody understand that? Now, we don't only have to use the 9 p.m. We could also go out on a daily, okay? So let's say that we believe that it's going to go up. That's my bias, okay? So I'm going to enter one contract here for the 9 p.m., okay? Now, again, if you had a bias to the downside, you could take one that was trading below price, okay? Now we can go over to the 10 p.m. and we can do another one there as well. So again, as I said, my bias is to the upside, okay? So in this case, I'm going to choose the $33.25. That's my risk. Now, let's say that your bias is to the downside. Well, that would be simple enough to come in here. You've got 78.38. You could do the at the money at 48.50, or you can even come more out of the money at 71.75. Okay, so you could do any one of these. Now, in addition to that, because we're expecting a big movement, we could also come in. We could do the 7 p.m. to 9 p.m. And again, you need to look at the indicative index, and currently is at 78.42, okay? Now, let's say that your bias is to the upside. you could come in here at 78.50, and for $5 you could do a long spread. You could also do a short spread. Okay, the short spread would be $12. Do you see that? Now remember, this is going to end at 9 p.m. Okay, but we could also come in and do a 6 p.m. to 11 p.m. and see what they have available. Okay, you could go all the way out to 11. On the long side, you're risking $6. Okay, on the short side, you would be risking about $13. Okay, just depending on what your bias is. Okay, now another way that you can actually do it is you could come in and say, okay, I think that it's going to go up, and you can see we already have a couple of positions to the upside. Okay, you could actually do one to the upside and then a binary to the downside. Do y'all understand that one? Now, the one thing that I do when I'm trading a market report, not on the spreads, only on the binaries, I go in and I set an immediate profit target. And in this case, I'm going to set it at 80 because my bias is to the long side. Okay, and on this one, I'm going to set it at 80 as well. Now, let's say that for whatever reason, I'm wrong. Okay, I could always come in here and say, well, you know, I might be wrong, so I might want to cover this using a longer term binary option. So in this case, price is currently trading at 78.45, and you could come in here at 78.20 for a very small amount, which is 15.25 in risk. And that way, if the market goes against my two long positions, then I have a short position that will cover that. Again, I'm going to go in and set a profit target. Does everybody understand that? Are there any questions so far? In other words, we can take this one market report and we can just build trades off of this one market report. Does everybody understand that? And I'm going to change these charts to a 15-minute chart. Are there any questions? With it being a 40 pip historical move off of this, you know, there's a lot of things that you can do. You could add to your long positions. You could add to your short positions. Any questions? Is everybody asleep tonight? Now, what's the advantage of setting your profit targets? The advantage to setting that profit target is sometimes the market will move up and then move straight back down. And there's actually potential for you to be filled on both sides. I don't have any on the short side, so I'm just going to add one to the short side. And It's $29 worth of risk on the short side. And all I'm going to do is come in here and set a profit target on that one as well. So now you've got 1, 2, 3, 4 short positions and 4 long positions. So it's kind of a more balanced positions. You also actually have the option to wait until the market report comes out. But if you do that, sometimes it's very hard to get in because the premium is moving so quickly. And I'm going to kind of shrink this up so we can see it a little bit. So in this case, you can see we have a short position and a long position, okay? On this one at 10 p.m., we only have the long position. Again, we could go in and actually set up a short position. For example, we could come in and sell the 78.35. Okay. Again, as soon as I do that, I always go back and put in a profit target. Okay. And then if we shrink these down, you can see we have one long and one short here. And then we also have all of the spreads as well. Selling does work a little bit differently. And what it is, when you sell a binary, literally what you are saying is, I believe that price, and this is the actual statement, okay? By 10 p.m. tonight, the Aussie dollar will either be equal to or less than the strike price, which is 78.34. Now, on the buy side, this is showing you the risk. But on the sell side, this is showing you your profit potential. Do you understand that, Mayor? So in this case, your risk would be 100 minus the profit that is shown, or potential profit that is shown, which is 73.75 at the moment. And all that means is you expect it to come down and be equal to or less than this strike price. Is it advisable to use OTM binaries? You know, advisable is not a word that I like. It depends on your risk level and your risk tolerance. Okay. I feel much better if I'm risking $35 to make, $60. If I lose that $35, I can still sleep at night. Okay. But if I was to lose $85, I might not be able to sleep as well. Okay. So it comes into risk tolerance and what you're able to live with. You know, some people love at the money. Okay. No, you are not paying 75.75. This is your profit potential. Your risk would be 100 minus 73.75. So for example, right now at 75, your risk is 25 to make 75 if you hold until expiration. Do you understand now, Mayor? Okay. And there's a lot of people that do in the money, deep in the money, at the money. There is no magical binary, to do. It really comes down to a trader's preference and a trader's risk tolerance. If I had to leave my screen right now, and you can see all of the positions, and these are all out of the money, okay, because that's my preference, okay. But basically, you've got less than $175 of risk on all of these positions, okay. And again, I mean, most of these positions is just me trying to teach you how to do this, okay. But look at the number of positions that you have, okay, that we have built on this, okay? And you're only risking a maximum of about $175. That doesn't include the exchange fee, okay? It's just risk on the table. Now, here's the important question, okay? And this is what I look at. If I have to leave my computer right now because I wanted to go to bed, or because something happened to my mom and I need to go take care of her, could I leave my computer knowing I only have $175 of risk on the table? Yes, I could. I could still sleep. Do y'all understand that? Yes, it can be done on the phone app as well. I use my iPad a lot, Jenny. I look at my charts off of my computer screens. But when I'm using Nadex, a lot of times I'll use my iPad because I can pick it up and take it with me. If I go to another room in the house or whatever, I'm not tied to this one position. Any other questions while we're waiting on this market report to come out? What months are used? What do you mean? On forex, we don't have a month. It doesn't go by contracts. Are you talking about the indices, Maynard? Well, it tells you when you're looking at them. It will tell you when you're looking at these, this is the December contract. If you're trading, for example, crude, and I think crude changes next week, it tells you right now it's trading December contract. So just always look to see, because I have been caught sometimes where I'm looking at one contract and Nadex is on another contract. I've been caught in that, and it's taught me very quickly, always look at the contract in Nadex. And I do. But with forex, you don't have those contracts. They're there. Because the Nadex, you may have to look at the table itself. If not, it definitely tells you on the chart. But the month is always indicated. What's my opinion about placing trades quickly after a market report? I think it's hard to get in after the report, but it varies because sometimes, you won't have a lot of change in the premium, so you're fine. But other times I've seen it very hard to get into them. I prefer to do it before it comes out, but I know that my indicators are typically leading indicators, so I'm willing to put that risk on the table. If you're not willing to put that risk on the table, then you shouldn't be doing it. And I think today was a great day. If you read the article that I posted today, the US CAD and crude are typically, historically, it is an inverse relationship or a negative correlation, okay? But today they moved in the same direction. That's extremely unlikely, in my opinion, okay? But it happened because we're dealing with markets and live edge, and it happens. And I actually, I think I was short crude and I was long on the Canadian. And when the market report came out and the Canadian decided to continue, the USD Canadian decided to continue down, all I did was do a short binary. The one short binary covered the long positions that I had. So I was break even on the USD Canadian, but I made money on the crude. I mean, those things, the market will do whatever the market wants to do, even with the best setup. One thing you will realize as you start to trade is there is no either you're right or you're wrong. It's the market's always right, okay? And it will do what it wants to do when it wants to do it. It's just the way the market works in general. We are trading the likelihood that this market is going to move up or the likelihood that this market is going to move down. That's what you're trading. It does not make it for certain. Any other questions? We have 3 minutes before the market report comes out. Any other questions? And I'm open to any questions as long as they're about binaries or spreads. And also, if y'all are trading the market reports, and let's say that you decide to get out of a position. In this case, let's say I decided to get out of the short position because I have a profit target in. Make sure that you click on your profit target, which is your gray box, because otherwise you'll have an order sitting there that could be filled. Does everybody understand that? And I don't know whether you know it or not, but you do have the capability of sorting this to time left. I use that a lot because I'm more concerned about the shorter expirations versus the longer expirations. If you decide to exit a position, Vita, always use your profit target area, which is this gray box, versus, for example, just clicking on that. This is going to open up a new order ticket, okay, and it will place a new order there, okay? You don't really want to do that, because then you would have two orders to take you out of the market instead of just the one order for exit. Okay, the low of this bar so far has been 46, and we've gone up to 68. So we should still get some movement out of it. Our one long position on the binary side has already been filled. Remember the profit target we had over here? It's already been filled. Remember, historically, this was a 40 pip move within the 15 minutes after the market report. The market report was just released. We've only had a 20 pip move so far. On the spreads, if I wanted to exit, all I would have to do is click on my spread here. And I like to actually have them open so I can watch as prices going up, or I can even go down. Remember, this is a 15-minute. I could actually go down to a 5-minute bar and say, okay, if this shows signs of weakness, then I'll exit the spread. The spread is beneficial for you to stay in because it's giving you the profit. As long as that's moving up, it's giving you additional profit. Now, you do have to remember when you go to exit, okay, see how the sale is highlighted? Because I clicked on here, it meant to close. So you will need to actually click on this. You can also set a profit target on these. For example, I entered at 78.55, okay? So I can say, okay, if this goes to 80, then I want to get out, okay? And place the order. And if I come over here, you'll see I now have an order at 78.80. Does everybody see that? So let's wait and see if it hits it. And if you wanted to, you could set them on these 11 p.m. expirations. It would be up to you. You can also just leave it. Why? Why would you leave a spread open? Because if this were to continue up until 11 p.m., okay, let's say that it went up to 7,900, okay, you would collect what the expiration is, okay? The expiration value is what you would collect. So let's say at expiration, it was at 7,900, okay? What did you get into the spread at? On the long, it was 78.56. So it will pay you the difference between the expiration value, which was here, and the value on entry that is here, okay? Basically, it would pay you $44. Does everybody understand that? And again, if you want to exit, let's say that we wanted to exit this right now. Remember, we have an order there. Click on the order, okay? Because if you do not, if you click on this one, then you're going to actually have two orders sitting there. No, you do not get the maximum value if the movement is not there, okay? It's the expiration value minus the value that you paid on entry. You will only get the maximum payout if it goes above that number. If it is above that number at expiration. Okay? Did that clarify, Vita? Now, currently, this is a reversal bar to the upside, which is why I'm still holding. And remember, I have a order at 78.80, which is about 12 to 13 pips away. And remember, too, we've only had about a 26 pip movement. Historically, it's 40 pips. And it's got about 3 minutes left, so we may not get the historical move. And that's also why I didn't go out 40 pips on my binary. In other words, I calculated within my calculation of how far out to go. Hey, it might not move that much. So what's safe? A 40 pip move would be up to 86. And remember, it's the 15 minutes after the report. So that's the 8:30 to 8:45 price bar. Well, thank you. I appreciate that comment. Well, I know some people when, if I say, okay, historically it moves 40 pips, they go out 40 pips because, you can get that binary for about $5. But what happens like tonight, we didn't see the 40 pip move. Okay, I allocate for that when I'm going out in my binaries. Now, I've got a quick question for you. Which one was better risk to reward wise, the binary or the spread? Anybody willing to take a guess? Vita, you are correct. The spread would have been. Because at one time we had a $15 profit on the spread. That was a 1-to-3 risk to reward ratio. And on the binaries, we had about 1-to-2, a little bit over 2. But the spread from risk to reward actually made more money. That's not always the case. But I look for one specifically that I think I can get a higher risk to reward ratio on. Because remember, on the binaries, we paid about 25. We got out at 80, okay? So your actual profit was what? Actual profit on that was 55, okay? So you did $25 of risk to $55 in profit, right? That gives you a 2.2 risk to reward ratio, okay? On the binary, if we had got out when it said 15, okay, that would have been 5 to 15, okay? That would have been a 1-to-3. Well, we sold it at 80. To exit, we exited at 80. And sometimes 90 can be hard to get, which is why I set it at 80. And that goes into, am I willing to continue to hold that another, 30 minutes to get that extra $10? To me, that would be pointless from a, how much am I making per minute scenario for an extra $10. In other words, I like to get in, make my profit, and get out. Some people like to stay in. It's really your choice which one you want to do. And see, in this case, your higher premiums were on the sell side. And yet I took the lower risk, which was on the buy side, because that was my bias. Are there any other questions tonight, guys? Because I'm just going to let these expire at this point. Any questions, though? Again, I love trading with Nadex, especially the market reports. Because that's the only time I actually have to be at my computer is for a market report. And y'all saw tonight, you can build all kinds of trades on this. You could have went out until 7 a.m., 11 a.m., 3 p.m. There's just so many different combinations that you can do. It's unbelievable. All right, if there's no other questions, I'm going to go ahead and end the session. I hope everyone enjoyed it, and I hope it gave you some ideas on ways to use Nadex binary options in spreads. Thank you, and y'all have a wonderful evening.